Also, some other breaking news that just took place this morning as well. Elon Musk now appears to have lined up $7.2 billion in funding commitments in equity for his bid to buy Twitter. It's according to a new SEC filing by Musk that just came out. The filing listing investors who've committed funds to help Musk finance the acquisition. They include Oracle co-founder Larry Ellison, as well as Fidelity and Sequoia Capital. The filing also says that Saudi Prince Al Walid will keep his 35 million share stake in Twitter. Elon Musk completing it when he completes that deal. He had previously, if you remember, criticized Musk's bid, saying that it undervalued Twitter. There's also a couple of other names in that filing that we got to keep our eyes on as well. I don't know if, but fascinating nonetheless, because what it does do, Becky, is take some of the pressure off of Elon Musk in terms of how much money he's ultimately going to have to put up for this whole thing.
And Tesla shares, too, because it means he's not going to have to sell more Tesla shares to finance this. I'm looking at the list right now. Bamco is on that. That's Barron Capital. So I've reached out to Ron Barron to find out. I think he's got $100 million. Larry Ellison, you mentioned him. He's the biggest. He's up for $1 billion commitment for this. Sequoia, who you mentioned, has a $800 million commitment on some of these things. But it'll be interesting. We reached out to Ron. We'll see if we get a note back from any of those
There's a line
things
in the filing, Becky, that seems to suggest that there's still conversations going on around whether Jack Dorsey would roll his stake in. I don't know if you saw that.
I did not see that. I'm just looking at the chart that they put out in the SEC
he said
filing.
Some really positive things. And then we knew Ellison's name has been there all along, right, Anna? Because they're kind of like
they're tight
and aligned in the way they view the world to some extent, which is getting close to 54-20 now. Andrew, you were sort of, when it was down at 48, you're like, maybe this still won't happen. I don't know. I think maybe but we still got regulatory issues, and in Europe as well, right? They're horrified over there, not surprisingly.
Well, they have some, this new, I think last week was when Europe said that they're going to move forward with all of these restrictions. They've got commitment on this at this point to say that you're going to have to do a lot more. If we tell you on any social media platform that we don't like what you're doing because we think it's threatening democracy, you're going to have to deal with that. So if he does win this bid, it's a global company. He'll have to deal with all of the new regulations.
The way that Europe,
rules.
I don't know if you saw it, the way the European rules work, they can take up to 6% of your revenue annually if they feel that you are not. I mean, if you would effectively lose the case. Yeah. But that's what the fine is.
He's not their native son either. You know what I mean? He's one of those ugly Americans that they're jealous of. Well, born there, but he's here now, and they got SAP. I guess that's
likely hard to create a bifurcated version of Twitter, meaning I imagine that whatever rules you have to put in place for Europe, and this is what Europe's trying to do everywhere, whatever those rules are, effectively come here. And we saw this with GDPR and other things. So it'll be interesting to see how that changes the dynamic of his interest in Twitter and what he can ultimately do with it.